Hello guys, welcome back to my YouTube channel. This is Joshua from Forex with Joshua Trading Community. If it's your first time coming across my channel, don't forget to smash that subscribe button, leave a comment down below, and if you know that you are a total beginner, don't forget to turn on the notification bell to be alerted every time I get to drop a new video. So in this video, I want to make this video very short for you guys, where I'll be showing you how to anticipate the market and as well as how to draw market trend lines to perfect your market entry. So without further ado, let us jump into the market chart. So right now on my screen, I'm actually having GJ, which is GBP JPY for all the beginners that are on this channel. So I'm going to walk you through how to draw trend lines, how to use trend lines in your advantage, and how to actually identify market structure using trend lines. So without wasting much time, let me just clear my chart so you can see this is my chart right now. So let me clear my chart. So whenever I'm about to draw my trend lines, I always make sure I'm not using any indicators on my chart. So for all those that are new to my channel, I'm actually a pure price action trader. That means I don't involve any indicators, any moving averages on my chart. All I'm going to concentrate on, it's me actually having a clean chart and nothing but a pure chart. So for those that are using TradingView or coming across TradingView for the very first time, we have got these tools on my left hand side, and you can actually see that this is the trend line tool that we actually use. So you can just start this to actually put it to your favorite tools. So from there, we can see that when we get to zoom out, so for this example, I'll be using the 4-hour time frame. So we can see that a trend line, it's simply the parallel support and resistance. So I get to have so many questions and comments, people telling me, can you explain the difference between support and resistance, the normal support and resistance, and trend line? So there is no actually any difference between these two. The only difference is the trend lines, they're actually parallel support and resistance, whilst we get to have horizontal support and resistance that we get to use on our daily basis. So looking at trend lines, which we have said these are parallel support and resistance levels, we get these trend lines, they get to connect the highest point and the lowest point if you're looking at resisting trend line. And if we get to look at supporting trend line, it actually connects the low point of the market and the other higher low point to actually give you a clear direction of market structure where the market is actually heading. When we look at the other trend line, which is the resisting trend line, it connects the higher point of the market and actually the low point of the market, which is this particular point. So now that we have gotten to know which the two types of trend lines that we actually have, let us try to analyze GBP JPY starting from the higher time frame, of which my previous video actually I had to show you guys how to break down the market from a weekly time frame all the way up to the daily time frame, which is a day trader's time frame. So in this video as well, I'll be breaking down the market simply by using trend lines and how to actually identify clear market direction. As you all know, there's always this trending saying which actually tells us let the trend be your friend. So looking at GBP JPY on the higher time frame, we can see that when I move to the weekly time frame, we actually get to have GBP JPY on the higher time frame. So what are we looking for on the higher time frame is to actually identify market structure. So when we identify market structure, we can see that the market made its high around this point, and we had the market creating its low at around this particular point here as well. We had a high there, and as well as another high and another high there, and as well as another low here. So this clearly indicates that we are in a bullish market structure. For all those that are newbies on this channel, a bullish market structure is simply an uptrending market structure. So without further ado, let us draw our trend line starting from the low point, since we are identifying the market that's trending to the upside. So we're actually going to start from the lowest point to the highest point, which is this particular point here. So now we get to have I get to have so many messages both on my WhatsApp and also my Instagram, people asking me, how do you actually draw your support and resistance or trend lines? Do you use the wick, or should you consider the body? So the answer that I get to give to all my students and everyone that comes to me is that whichever way you actually decide to do is actually correct, because we have got other price action traders that prefer putting their trend line or support and resistance using the wick, and we have other traders that actually get to decide to use the body of the candlestick. So they are all both correct. You just need to decide which one you're actually going to settle for. So for me, you can find that most of the times I get to use the body, and most of the times I get to use the wick of the candle. So from here we can see that we have this market here. We have this market structure here that's connecting this week, that's connecting the trend line, and as well as we get to have this point that touch there, and we had the body that came to touch this trend line here. So this actually indicates that we are in a very strong uptrend, and the market is actually respecting our trend line. So from there, what else are we looking forward to see? From there, what I'm looking forward to see is to actually move to the lower time frame. So when I move to the lower time frame, which is the daily time frame from the weekly time frame, so from there we can see that when I drop down to the daily time frame, which is the 24 hours time frame. And for all those that have been asking me about time frames, when you move to any time frame of your choice, whether the weekly, the daily, the 4 hour, or any other time frame, when you jump to that time frame, one candle represents the time frame that you're at. So that means when I'm on the daily time frame, any candle that I'm looking at there represents 24 hours. So looking at this chart here, this chart represents 24 hours on every candle that you're able to see on my chart here. And back to the trend lines that we're actually talking about, we can see how nicely the market has been respecting these trend lines. So from there, what else are we able to pick out from the daily time frame? Remember, rule number one to everyone that has been with me and on this channel is that I always emphasize, always keep your chart as clean as possible. I'm not one person that actually likes to congest my chart because I don't want to confuse myself. Reason being, as a price action trader, I need to make sure I focus on how price is moving, and to make matters worse, I need to focus on strong support and resistance levels and trend lines as well. So looking at this market structure here, which is identified by this supporting trend line. So for all those that have been wondering, the name of this trend line is actually known as what? Supporting trend line. So from there, keeping it simple and very clean, we get to have another trend line that's connecting the highest point to this lowest point here, known as what? Known as the resisting trend line. So this is known as a resisting trend line. So from there, zoom in on the daily time frame, we can see this massive move here that was coming from this resisting trend line and dropped all the way to this particular point. And for those that actually get to know or understand chart patterns, you can know and see that we have a clear W pattern formation on this chart, connecting this move to this trend line, and as well we have got that point there breaking to the downside. Then we had the market failing to break this supporting trend line for the second time. From there, we had the buyers jumping in with massive momentum, pushing the market to the upside. And from there, we can see that we have a support level sitting around this level here. Hence, this market didn't actually manage to reach this resistance as a result because of this able to see from the daily time frame. So we're not trying to do anything else on or much on the daily time frame because we are not looking to make entries from the daily time frame. So as a swing trader or a day trader, we're still looking to drop down to a lower time frame. So I'm going to drop to the 4-hour time frame just to see clearly how the market is exactly what we're seeing on higher time frames. This is the same thing that we are able to see on lower time frames as well. So from there, let me just adjust these. Okay, so we have the market nicely sitting in between our resisting trend line, and you know now that I'm transitioning from a day trader to a swing trader now. So that means I'm making more of my entries from the 4-hour time frame. So for all those that are swing traders and looking to swing a trade, a 4-hour time frame is actually a very advisable trade time frame for you to place your swing trades from. So from here, if I was to swing or looking for swing opportunities on GJ, I would end on the 4-hour time frame, and from there I would use support and resistance. And for all my students, introduce what support and resistance levels in this case. So from here, we can see that we have this historical data here where the market failed to break below, and we also have this historical data and this historical data again that affected this market. And we still believe as price action traders that the market or these reactions who are capable of doing what, affecting the future. Hence, for all those that have been wondering what price action is, it's actually the use of what historical data used to predict what the future market movement. So as a price action trader, we get keen interest in firstly understanding the historical data before we can actually understand what the current price and as well as the future. Looking at this level here, we have got a very strong level of resistance. We can see that sellers were having troubles breaking above this point the first time, the second time, and we still have the market showing potentials of it pushing to the downside. So from here, we can see that if we drop down to the 1 hour time frame for further day trading opportunities, we can see that we still have a trend strategy aligning up here. So from there, we can just quickly connect this low here to that particular point here. We can see that the market disrespected this particular point here. And for this reason, this tells us that the market now is looking to push further, looking at our chart here. So we can still have the market pushing or making its continuation to the downside. And for those that understand my chart continuations, we can see that we're currently having what, a continuation pattern here, a very nice continuation pattern here, of which if we were to use this entry here, we could have made an entry, or use this chart pattern here, we could have used this entry. Stop loss is always above the range. As a result, we could have been targeting this low here, or this closest support as our TP1, and obviously targeting this point as our TP2, and finally our overall TP, which would have been our TP3 here. So looking at this setup here, this is how I could have used my trend lines in order for me to identify those juicy entries and profitable market entries. So without wasting much time on this video, make sure join my Telegram community. The link is just below this video to actually have access.